Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So in general, overall picture stands the same as yesterday. We're just watching for a possible reaction on the support area. This market hits at the same time with the performance recently that we've got. There's some acceleration here. It clearly becomes the situation that might be, and actually, because we suggest is the continuation of this initial swing. So we get the retracement. Now we have the continuation, and with this performance, and this stands even slightly faster than here, chances that market later could proceed to the OP, reaching 1825, 1830 area around the next support currently seems significant. That might happen. Today, we need to discuss important moment in detail that might be important if you're planning to take long position, scalp trading for the pullback, taking a position on a possible pullback from this area. And it relates to the target of the COP. So initially, when we were considering this extension, we used this A point as a starting point with the reaching of the first target. And this makes sense very often, just because standing tight a target that is a bit higher than its target from the absolute top has advantages as a position taking, as a profit fixing, just because you avoid the competition on the order execution around predefined level. But at the same time, we should not ignore, or better to say, we should also keep in mind that we have this absolute target from this point, which stands 1887 actually. Why this is important is just because on the lower time frame, before the reversal, market could try to make the attempt to complete this target as well, grab the stops at the same time of the short-term players below these lows, and only after that it could start upward action. That's why when you intend to take the long position here, you need to count on this possibility and place stops below the potential target that might be reached. That also let us better understand what patterns might be formed. So for example, on the 4 time frame chart, we are watching for double repo pattern. Have actually a nice thrust down. Here's also close above, Fibonacci close below. Now we need to close above. And from the ABCD pattern, it seems that there should not be any another action to new lows. It's just because OP has been completed perfectly, and market has no reasons to show some washing risk or something of that sort. Right, on the 4 time frame chart, we don't have reasons for that, but we have reasons on the daily with this COP. It means that the double repo probably, if it will be formed, it will form new lows here, a bit lower than this one. And the shape of this pattern on the lower time frame more probably will take the structure of the butterfly. Just because forming of the butterfly and the reaching of the 127 extension stands precisely at 1886. So market could form the butterfly, hits the daily COP, and then starts upward action. Later, maybe the double repo takes the shape of the hand shoulder, so you could follow any pattern that you would like to. Actually, if you like the Chod-Napoli patterns, you could follow the Chod-Napoli. If you like the harmonic patterns, you could follow the butterflies. Later, if we will get the hand shoulders, also might be the patterns, classical pattern that you could follow, just because butterfly very often becomes the part of the hand shoulders. And the final moment here is that probably here we could say that signs of the bearish dynamic pressure exist, because recall what we said previously. Yesterday we said that might be maybe some kind of the ABCD pattern before continuation. But take a look, market was not able to form any ABCD. Try and make an attempt here to move higher twice, but then collapsed back, and now is turning to some sideways consolidation. This reminds the existence of the bearish dynamic pressure, since trend has turned bullish, forming nicely trend here with the MACD, but price action is not, standing lower. And that also makes us think that before any upward deeper retracement, if of course it will happen at all, market should try to reach 1886 area. So whatever happen retracement or not, but keeping an eye on the 1886 save a lot of money to you. If even we would be wrong and market keep going lower, your risk will be very small compared to what could happen if you're taking position right there. So in this case, your risk will be a few times greater than if you follow to the patterns that we have currently and this minor nuance that we have on the daily chart with this untouched COP target. So that's a few moments that we would like to share with you today. For the bears, situation in general is mostly the same. If you do not have intention to take the scalp long position on lower time frames, you just need to wait for a pullback. Supposedly it should be the same levels that we have discussed. Right now it's 1950 and 1930, but if market hits this level, both of them should move also slightly lower. But anyway, you need to wait for resistance before making decision on taking the position.